Hello traders, Gary Wagner here, 10:30 a.m. in Honolulu, Hawaii, Tuesday, the 6th day of September, and this is the daily report for gold. We currently have gold trading well off of its new contract high, currently trading off about $20 on the day. As you can see, current print 1880.40. That would be COMEX most active, and in terms of cash market right now, 1877.58, right in that area. Of course, we did recommend a buy position last night. We bought in 2 increments. Our average buy-in is 1898, 1898.50. That's our average buy-in. What happened was, as this marketplace was going up, it actually hit a high last night of around 1921. Let me go ahead and pull up a 60-minute chart so you can see that market as it came up. Now, what we saw happen was we had good buying coming into the market. Once it hit this top at about, as I said, 1920, 1921, there was an announcement that the Swiss government was going to work with their currency so that they would let it devalue. They wanted to devalue at roughly to 120 and then to peg it to the European Union. Now, that initially was considered to be a very bearish statement on the market. The market came down. I think a knee-jerk reaction ensued, because what we're seeing now is the fact that if in fact the Swiss franc, which is one of those safe haven currency assets, actually gets pegged to the euro, in my opinion, that's a very, very bullish statement on gold. We do have the equities markets under pressure this morning. They are closing, but they are coming off of their lows. And we have the metals trading off of their lows also. Traders, I do want to look at this market in 2 ways in terms of a Fibonacci retracement from 2 different angles. They come out roughly to the same point, and that's where we're finding support. Support is absolutely in gold, basis cash at 1860. Of course, our stop is at 1850. Fairly close, but to this moment, it has not gotten hit. Now, the first of these retracements I do want to show you is that as this market comes down from the old record top, and we simply look at our retracement numbers, what we get is 38% here, 50% here, and then our 75% retracement at 1557. And as you can see, it does appear as though that is where we've gotten some very, very strong support in the market. One other way to look at support is this is a 360-minute chart of cash gold. And as you can see, this Fibonacci retracement is drawn a little bit differently. Whereas the first one we saw was from that target, this former high down to the bottom, we got a 75%. This is from 1702 up to 1920, or the new record top. And if we look at the 23 and 38% levels, you can see that the correction or the sell-off following this move to the new high ground right up here, this new contract high, is approximately a 23% retracement from that point. So in that way, I see technically a good level of support here also. Traders, we are looking at our weekly chart in straight candlestick format. We will look at a couple of Henkin charts in a few seconds, the Japanese average. And as you can see here, in terms of the Fibonacci retracement, when we peg this low, this is 1700, and then we use the old high, we come up with exactly a 23% retracement. However, when we change this high, in other words, we move this high over to the new high, you can see it falls slightly above that, but still roughly around that 23% level. Traders, for the last charts I do want to look at for the day, as you probably have noticed, I have converted all of the charts we have been looking at into Japanese average charts. If we start with the very, very short-term charts, these would be our 60-minute charts here, our cash, and then our continuous contract, and this is of COMEX itself. When we take a look at that, first of all, you can see we went all red in this area, but we are starting to see a couple of green candles are very small, and we actually do have a pivot point, that pivot point being this red doji, which is then followed by the last couple hours in trading in which it's gone green. You can also see that same activity not only in the cash, but you can see that in the contract, which is our continuous contract of COMEX. Same type of activity. You can see that there. Now, in terms of our daily is still full-blown in a bullish mode, even with the sell-off from this new record high, and that's this particular wick here. Realize these charts will lag behind, but that's still showing us that we are in a solid move up longer term in gold. And then finally weekly, and weekly absolutely is still showing us a solid move up in gold, even with this market coming so fast and so hard off the highs. Now, the 720, that is showing us a pivot point of a potential market move down. And so that when we take a look at the Henkin charts themselves, we are getting a longer term indication that this market will continue higher. The only caveat, of course, is that as we go into this market, in terms of the Elliott wave count, we've exceeded wave 5. I talked about on Friday what is known as an irregular top. So it would either be an irregular top. If that's the case, we will continue and get some sort of a C wave, or an extension. On an extension, we can go to a count of 7 or even 9 on an extension and continually make new highs. We will have to see how this market wants to trade over the next few days. But traders, my belief is that after we made that stab at higher prices, went to 1920, it's simply a matter of forming a base within the marketplace if we do not see a correction first. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange